CAS is staging a major conference on risk management this week, the CAPCO conference. It's particularly well-timed given events in the Eurozone. Professor Philip Booth is with me. Professor, are we on the brink of yet another disaster?
I'm not sure that we're on the brink necessarily, but there are huge financial risks within the system that have not gone away. In particular, in the Eurozone, there's a sovereign debt crisis. Much of that sovereign debt, of course, is owned by banks, which themselves are in a rather shaky position. Domestically, in the UK, I think there could be a real problem if economic growth remains slow, if interest rates rise, as they ultimately must. Households may well get into trouble given their level of indebtedness. In addition to that, we don't really know what the effects are going to be when the Bank of England's programme of quantitative easing comes to an end. Is quantitative easing holding up asset prices artificially, for example? And when it comes to an end, will there then be a fall in asset prices, and will that then lead to risks materialising within the financial system?
But quantitative easing is essentially printing money by another name. It always ends in disaster, doesn't it?
Well, if you print money forever, then you end up with hyperinflation. The risks with the Bank of England's programme of quantitative easing are a little more subtle, and they are really the risks that asset prices are artificially increased, but we don't actually get under any underlying economic growth. And then when the programme of quantitative easing comes to an end, house prices might fall, equity prices might fall, and this may put financial institutions and households in real trouble.
Is some sort of crisis inevitable? Is that what you're saying?
Yes, indeed we are. I think we're in the midst of a crisis which we're putting sticking plasters over at the moment. This is more apparent within the Eurozone than within the UK. We could get out of our problems, I think, in the UK with a fair wind, good economic growth and so on. But in the Eurozone, where huge amounts of money have been pumped into the banking system by the ECB, this is really just putting a sticking plaster over a very serious sovereign debt crisis. And it's a sovereign debt crisis with which the nation states have simply not got to grips at all.
Is there an easy answer?
Well, as Ronald Reagan once said, there is no easy answer, but there are some simple answers, and those simple answers involve reforming welfare states, reducing taxation, deregulating labour markets so that we get some economic growth again in the Eurozone. And they probably also involve beginning to dismantle the Eurozone so that it applies to a much smaller number of countries.
But these are not politically easy choices.
They're certainly not politically easy choices for those in the European Commission and those who control policy in Europe, no.